Hello. Let's do a quick follow-up on GBPUSD and see what's our next move. Okay. And also teach you the trading style that I use on GBPUSD for my intraday trading. Okay. So this is GBPUSD on the daily time frame. You can see how yesterday's daily candle was. See. It has already engulfed the Friday's bearish candle. So now I'm expecting more push to the upside. Comes and takes out this high. Then our next target will be this high here. All right. So now, if you go to weekly, that's the same concept. After this week, last week but one, if the price was to play out as bearish, then we would have seen huge bearish move after this one, but price actually turned to the upside, so it's a confirmation that we're going to continue pushing to the upside. All right, so now our push to the upside is around, if during our previous analysis we had done FIBO all the way here, just like we did on Monday. See, price turned around this green candle here, just like we said. It's a very important candle, but didn't touch our 61.8 percent Fibonacci level, which is around 15,500. Then you might have just marked it in the purple line, this one, so you might see price go all the way here. Weekly time frame. Daily, the same concept. I expect price to go to the upside. You can see these swing high here. Price came all the way here, then with 50% retracement level, and now it's pushing to the upside. So if price continues to go up, then this is our target, which is 0.27 Fibonacci extension level, which will be above this next target that we expect to be liquidity level to expect to be taken out. If you come to 4 hour, you can see clearly, yes, price came all the way to around 50%, then went to the upside. Now these push to the upside from the 4 hour time frame. You can do your another FIBO all the way here. See, if you do another FIBO, price also came and on Friday make a turn around the 50% Fibonacci level here. You see, now price is going to the upside. So if price did make a turn around 50%, so it must come and touch our extension level, so which is around 15,000. Okay, so our target on the 4 hour time frame is coinciding with the liquidity level that we expect to be taken out, which is this liquidity level here. So let's get rid of this. All right, so expect price to push all the way and takes out that liquidity level. Then when you come to 4 hour, I showed you my simple analysis strategy that I use to confirm the main direction of the week. Okay, it's very simple. Just go to the 4 hour, that is on Monday. You get the first 2 candles of 4 hour, you highlight the highest and the lowest point. Okay, the highest and the lowest point of those 2 candles, whichever side the price breaks, that is the main direction of the week. Okay, now you can see this was our first 2 candles, the 4 hour. Price has broken to the upside. Okay, now price that has broken the upside, that has confirmed to us it's going to be a bullish week. All right, so we might see a push to the downside, then confirms to the retail traders that this is now is a double top, so now you're heading down, and they just get taken out when the price is pushing to the upside. All right, so now that price has broken the upside, we see some retracement, perhaps around this fair value gap or here, but this is quite low, so we might see some retracement, then we push the upside. If you're a swing trader, you can start placing your buys, but we might see some retracement here. Okay, go to 4 hour. No, 1 hour, sorry. Yes, see 1 hour. Yes, 1 hour you might get some retracement around this zone here. See, around 30,000. Yes, takes out this one. It's around 13,000. Now, when it comes to intraday trading, right, there are specific time zones or specific times of the day that I check. That's why you see from the people who've been trading with me for some time, I usually tell you there are specific times that you're supposed to be trading. That is from 8 in the morning up to 6 in the evening. That is Kenyan time, right? But when it comes to New York time zone, that is from 2 a.m. New York time all the way to 11 a.m. New York time, which is the same as the time zones that I've mentioned in Kenya. Now, if you learned about the power of 3, there's a concept we call the power of 3. Like, if you see the candlestick formation, for the ones who are going through the baby pips, they are the basic anatomy of candlestick, the way a candlestick looks like. Like if you zoom, this is whenever you see the time zone you are looking like for 1 hour, every candle represents price movement within an hour, right? If you go to 30 minutes, every candle represents the price movement of what? Of 30 minutes. Okay, so for every candle you can see, like let's say for this one, for the green candle, whenever the bodies usually represent the open and the close, all right? Then the wicks represent all the levels where the price had gone within the 30 minutes period. Okay, so now for this 1 hour, you see price opened at this level. This is the open. Remember, open, then price went all the way up, pushed all the way up here, then came all the way here. But whenever you see a green candle, that means price opened here, then pushed down all the way here, then started going up. See, going up all the way here to this level, then closed at this level. That's why you see a close of this candle is equal to the open of this candle, and a close of this candle is equal to the open of this candle. That's why you see this one now opened right here, pushed down, then came all the way up here. Then you can see the price movement all the way here and down. Okay, so now what I'm saying is, if it's a bullish candle, price starts by forming the lowest point of that candle. If it's a bull, like the one that is currently forming here, this 1 hour from 8 to 9, you can see it's a red candle. Price has opened right here, then pushed all the way up here, then price is going down. Okay, now this is going to be the price movement of from now 8 all the way to now to 9. So this candle is going to close at 9. Okay, so if price is if the candle is going to be bearish, now you expect to start. It starts by forming the highest point, then clears the lower wick, then closes. Let me give a good example. If you go to 1 hour, you're able to see a good example. If a candle is going to be green, starts by forming the lowest point of it, then forms the highest point of it, then closes. All right, let me see. You see, imekuja chini kwanza, form this lowest point of that. This is every candle represent 1 minute. All right, this is the lowest point price imekuja for that 1 minute, then imepush there. You see, if it's going to be green, starts by forming the lowest point of it. Yani kama ina kwa green, every candle starts by forming the wick in the opposite direction, then pushes to the main direction of the wick. All right, this is the style of price for candle formation for all time frames. All right, so if this is how the price is forming, you see, we push up, then you see later in a close inaanza kuform the wick in the opposite direction, then goes to the main direction. Okay, so if this is what happened in 1 minute time frame, that is what happens in the 15 minutes, 30 minutes, 1 hour, all the way to daily. Okay, so what does that mean? If a day is going to be a bullish day, all right, if it's going to be a bullish day, then we expect the lowest point of the day to be formed first before price pushes to the upside. All right, now you see, now if this one closes red, you see price has first pushed all the way to the upside, created the wick, then came down. You see, any price first goes to the opposite direction, then pushes to the main direction. Okay, now if we go down to daily, let me show you. See the 1 minute, the way I'm telling you, imeanza na ku create the opposite wick, then comes down. Okay, if you go to daily, that is the same concept. If a day like kama jana, you see, kama jana, this was a bullish day. Let's go to, usually go to 15 minutes. So from this dotted line to this dotted line, that's the price movement in 15 minutes for yesterday. Ilianza who create the lowest part of the day, then the rest of the day continue to the main direction. So hata ukikuja kwa weekly, that's the same concept. If you are going to have a bullish week, the lowest point of that week is formed either on Monday or Tuesday. Then the rest of the week, price goes on to the upside. When you come to daily, then there is a specific time of the day. If let's say like today, this is what time? My chart is always set at New York time zone. If you go to your time zones on the chart, it is UTC -4. If you do UTC -4, that is the New York time zone. And I'm telling you, my trading session starts from 2 a.m. New York time, all the way to 11 a.m. Now 2 a.m. Kenya ni kama 9. Like if you see my line, hapa chini inaonyesha ni 1:45 2 a.m. See, come down here. My trading session starts from 2, exactly 2, all the way to 11. See, 11 huku Kenya ni kama 6 in the evening. Now what does that mean? If it's going to be a bullish day, then the lowest point of the day is formed. The lowest point of that day is formed between 2 a.m. to 5 a.m. 2 to 5, that is kutoka 9 and then to saa sita mchana. Okay, let me see the lowest point of the day is formed between, this is midnight. Hii dotted line inaonyesha penye price movement of the day starts, so the lowest point, like today I expect to be bullish. The lowest point yenye itakuwa imecreatiwa between now na mpaka saa 5 mchana, that is the lowest point prices will go for today, right? So from that point we expect price to push to the upside for the rest of the day, or to around now 6 ya jioni. That's why I tell you those are my active trading sessions. Hiyo ndio kuna both London and New York sessions. So if it's going to be a bullish day, the lowest point is formed between, now let's talk in terms of Kenyan time, that is between 8 in the morning to 12. So if you expect a bullish day, then you expect the lowest point of that day to be formed between 8 in the morning and saa sita. So if you're placing your buy, you place your buy and stop loss below the lowest point that was formed between now this time and 12, between now 8 and 12, right? Now watch out for these price movement for today, right? It's called the power of the, because if you know how the candle looks like, also I'm saying, if this is this is your candle, and it's going to be bullish, you expect the lowest point of the week to be formed before. So price formed the lowest point of the week, then pushes all the way up, creates the upper week, then closes, retraces, makes a small retracement and closes at that point. Okay, that's the same idea I'm using to do my daily trades. Okay, so we will use the same idea for trading today. If you see a bearish day, expect the highest point of that day to be found between that is between 8 to 12. Then price continues to the downside. Let me give you another example. If you come to, this is daily. If you come to weekly, you can see last week was bullish, right? This is our last week's candle. Let's go to daily and count. This was on Friday, this is on Thursday, this is Wednesday, this is Tuesday, this is on Monday, right? You see when the lowest point of that week was formed. This is early Wednesday morning. That is the latest time you expect price to form the week in the opposite direction. Okay, between Monday, Tuesday, and early Monday morning, Wednesday morning, I mean Wednesday London session. That is the latest time price is supposed to form the week in the opposite direction, right? So if this week is also going to be bullish, the lowest point of this week is going to be formed that is on between now yesterday which created this point here, which is the lowest point we have for the week, and today. All right, from my analysis I expect this to remain the lowest point of the week. Today we get a little retracement, then we push to the upside, we come and take out these highs here and continue to the upside. But this week we said we have some strong news on tomorrow, yes, right? Yes, we have the inflation rate news for the GBPUSD, for the GBP, sorry. So For this one, we need to stay out. For a start, if you're a beginner in this field, every time you see such strong news, then you stay out the market. Then we do a re-entry afterwards. Okay. Let's see. So now that is my trading style when I'm doing an intraday trading. Whenever I see now I'm expecting a bullish day like today, I take off I usually view my charts on the 15 minutes time frame. 15 minutes time frame. Okay, 15 minutes time frame. Then I map out my time zones. Midnight New York time, 2 a.m. New York time. Then we go to 7 a.m. is usually the retracement. Up to 11, right? Those are my trading zones, times, that is. So for today, the lowest point, you just need to box and chill this one. So the lowest point of the today, it's either this one or the level that will be created between now 2 a.m. New York time all the way to 5. So let me take this one to 5. Let me take it to 5, right? So you see this level here, this is 13, around 13,300. Between now 9 to 11, if price doesn't go below this point, now this is the lowest point of today. This is the lowest point prices will go down for today. If price doesn't form a lower point between now 2 a.m. to 5 a.m., which is Kenyan time is from 9 to 12. Okay, so watch out for that.